Hey guys. Well, thanks for having us. Welcome to Singapore. I know you guys are all coming from different parts of the world. So here we are. Every year during Token 2049, we hear from the best of the industry. Just a quick introduction. I'm Emma. I'm running LongHash Ventures, which is an early stage crypto fund since 2018. And here we have a bunch of really top builders in the space. We've got Armani from Backpack. We've got Ogle from American.fun. We've got Chris from Drift Protocol. And I'm sure these protocols are no strangers to you guys. Maybe let's take 2 minutes for each panelist to quickly introduce themselves and also their backgrounds and what led them to where they are today. Shall we start with you, Armani?
Yeah, sure thing. Happy to be here. My name's Armani, Ferrante, founder, CEO of Backpack, chief mad lad, I suppose. What got me into crypto? Ethereum white paper. It's kind of as simple as that. Yeah.
Nice. What were you building before backpacking? Can you kind of walk us through your...
Yeah, so what I was building before Backpack, a bunch of things. So got into crypto in 2017, worked on anything and everything, whether it was, a brief stint at Alameda Research, was working on Ethereum L2s kind of in 2018, worked on other L1s, and then came into Solana in 2020 and had the opportunity to work on a lot of the early projects in the ecosystem. So worked on the first decentralized exchange, the first central limit order book on any blockchain ever, got to build one of the first wallets, built, the first developer framework for building smart contracts. Just a lot of stuff because nothing existed at the time. And so, I've been doing a bunch of stuff since then.
I think it's so fitting to have Armani on the panel today, given we're talking about CEX versus DEX. I think you guys are kind of building both. So love to hear your takes later. And Ogle, would you like to introduce yourself?
Yeah. I feel so small next to a Chad like Armani, but I'll do my best. So my name's Ogle. I got into Bitcoin in late 2012, give or take, and built a few things. I was mostly known for doing hack recovery for a long time, and I think that's kind of, if anyone knows who I am, that's probably what it is. But lately, I've been working on a project called America.fun. And America.fun is basically a launchpad that's semi-curated. So you have like a lot of DGen launchpads, which are like Pump Fun and Bonk, etc. And then you have kind of ICMs, which are very regulatory compliant and so forth. And then in between there, we have a semi-curated type of experience. We're trying to make this a little bit safer, a little bit more like AOL used to be, and that's why the ticker is AOL. So focusing on that right now, building on Solana, and looking forward to chatting with everyone here on the stage.
I think you come with a unique costume today, so I think you take security very seriously.
Yeah, the reason for the costume
get your take later.
Yeah, it's existentially important. Whenever you deal with security related things, sometimes you have actual real security issues, and so I've got to be careful.
Yeah. And Chris?
Yeah. Hey, everybody. I'm Chris, more well known as Lil Perp on the internet. One of the technical co-founders of Drift. Before working on Drift, I was a software engineer at Amazon. Then during the COVID lockdown, just went down crypto rabbit hole. Fell in love with Solana community and tech, and been building Drift on there since 2021.
Awesome. And the backstage, I just learned that Chris met Cindy, the co-founder, over Twitter. I didn't know that can really happen. But I guess in crypto, anything is possible. So just to, I guess, level set the conversation, I would love to kind of start with a quick framework, right? As we talk about CEX versus DEX, centralized exchanges has been dominating crypto for the longest time, right? There's very powerful exchanges, right, before token can gain access to the public. But DEX has been gaining market share as the technology progresses, right? There's more and more things that can be built on blockchain, and more and more people learned how to interact with DEXs on blockchain. So I would love to kind of maybe quickly throw the question to the panelists, right? What are some of the kind of advantages and disadvantages you're seeing, right, when we compare DEX versus CEX?
Yeah, so maybe to create a framework for the conversation.
Yeah, that would be great.
I think a lot of people like to have this discussion in the context of the decentralization spectrum, where on one side of the spectrum you're centralized, and on the other side of the spectrum you are decentralized. I think I kind of reject the framing because there's a bunch of nuances with exchanges, in particular margin systems, that kind of make that framing kind of the wrong way to look at it.
Yeah.
Ultimately, whether you're building, a centralized exchange or a decentralized exchange, you should always view things through the lens of security and risk.
Yeah.
And so the way to evaluate an exchange, in my view, is through a couple kind of key categories. The first is through the lens of custody.
Yep.
The second is through the lens of margin risk management.
Yep.
And then the third, as we're kind of talking about in the in the backstage, is through the lens of market integrity. And if you evaluate exchanges through this lens, you could kind of throw away the whole decentralized and centralized conversation and really focus on what matters, which is, minimizing error and minimizing all the issues that you see in, traditional finance.
Yeah.
And each kind of point in the design space gives you different trade-offs with each one of these categories. So custody is generally what people like to think about.
Yeah.
You look at stuff like, not to throw Bybit under the rug, but they're the most famous example of like custody risk.
Yep.
The irony with Bybit was that it wasn't actually a centralized exchange problem. That was actually a hack of the Gnosis safe.
Yeah.
That was the DeFi product that got hacked.
Yeah.
The DeFi front end, but I digress. But custody is a really nuanced question. Because it's not simply about having a custodian or being on chain.
Yeah.
The nuance of a margin system is that you actually don't custody your funds. There's no concept of self-custody in a margin system. So if you're trading perps, there's no like your keys, your coin. Like that's just not true. That's just a lie.
Yeah.
With a margin system, it's the protocol that controls your funds. So you have to have a thorough analysis of what are the security properties of the protocol.
Yeah.
And the nuance of a margin system is that there's a ton of ways to drain the system that are totally unrelated to the custodian.
Yeah.
You could have the best custodian on the planet that's totally secure. It never gets hacked. And you can still drain the margin system. So you have to look at the protocol through the lens of, a very comprehensive, holistic lens. The most trivial example of this is to just look at the risk engine.
Yeah.
And maybe the most notorious example of this is set your FTT collateral weight to 1, deposit in, FTT in size, borrow USD and withdraw it, and then game over. And that can happen on a centralized exchange. It can happen on a decentralized exchange. It can happen on a hybrid exchange. And so you actually have to look at the risk engine. You have to look at the code, and you have to look at how everything's parameterized to actually have confidence in the custody of an exchange. Then there's, the second category of which I kind of alluded to, of risk. Right. Where you see this kind of all the time. You saw it with like the Mango hack kind of early in the days of Solana. You saw it with like, recently with I guess the most notable examples like these pre-markets that get kind of manipulated, or I guess Jelly with hyperliquids, like the most recent one. But it happened with every exchange that you can imagine, centralized or decentralized. And so you have to have a really robust risk management team that can do all the financial modeling, that has all the right price banding, that's actually measuring risk in real time based on the collateral, the assets, the open interest, the positions, the borrows. And be able to manage this thing at all times. It's kind of like you're riding like a horse, or you're riding like a lion with reins, and you need to like make sure that you don't get thrown off.
We quickly got into the weeds. There's just like a lot of granularities.
So risk management's the second thing, and then the third thing is just market integrity and fairness. This is something that TradFi is focused just decades on. There's tons of like rules, regulations, even legislation on market fairness. And I think this is a really interesting topic when you start talking about L2s versus L1s, and the decentralized exchange landscape, where you have something like, a centralized sequencer, which might eliminate, for example, vanilla custody. However, that centralized sequencer has a position of privilege. And depending on how you order the transactions, you can steal money by front running the user, causing people to get liquidated, omitting transactions. And so market integrity and fairness is a really important way to analyze these systems as well. Where, a centralized L2 sequencer might get rid of the vanilla custody risk, but it doesn't get rid of this a market integrity risk. And so ultimately you have like a trust me bro analysis through that dimension. And so there's tons of trade-offs to make. And this is why I kind of reject like the whole centralized versus decentralized framing. And it's a very, very complex and nuanced conversation, as these systems are operational beasts.
Totally.
And so yeah, that's kind of the
Yeah.
framework I would use for the
I
conversation.
think Armani just kind of introduced a very nuanced framework for us to evaluate the risk of sex versus risk of DEX, right? Because most people, I think for people who just kind of buying and hold or just trade normal things, crypto, you think about centralized exchange versus DEX are more like accessibility, right? Easy UI, UX and whatnot. But there's a lot of things behind the scene when you are, especially if you're dealing with a large amount of money, to understand the different risk considerations of sex versus DEX, and also what's considered as a good, platform. I think the objective is to build something that's fair, transparent, right? That's always the principle, but of course there's trade-offs with those. And I'd love to hear from Ogle and Chris. What kind of framework when you think about sex versus DEX? And
Yeah, I mean, I think
Yeah.
if we sort of accept the sex versus DEX framework, like you're saying, like Armani rejected this, which I think is totally fair. If we accept it, then I think the easiest way to look at this is you have on one hand basically like a vending machine, and then you
Yeah.
have on the other hand like a restaurant, like a full service restaurant. And so the vending machine is very easy. You walk up, you put your money in, you get out whatever the thing's there. If it screws up, you can't really complain to anybody because there's no one there to fix
Yeah.
it. But you get your product. It might be a little bit lower quality product than what you could get in a restaurant, but nonetheless you get what you're paying for at
Yeah.
least at that moment. And then you have a restaurant, which is more like a centralized exchange, and you have customer service, you have waiters, waitresses, you have a manager you can complain to, you have that. But there's also it's a little bit more hidden what's happening too. You make your order and that happens back in the back of the house, and it comes out to you, and you see it there. Could have arsenic in it. Who really knows? And so you definitely have trade-offs and the risk like he was talking about. I think that one of the common comments people make about decentralized exchanges is, well, you don't have the risk of basically your money being stolen, but you do, because you have lack of integrity in the market itself. So you have people who bundle launches, you have people who can do rug pulls, things like this. But you also don't necessarily have a lot of security when you go to the centralized exchange either, if you're not doing certain security checks, because then you have
Yeah.
situations like Celsius or like FTX, right? So like, yeah, the money's there and you can like sort of verify, but then they could be screwing you on the backside. You don't really know it. So I think it really comes down to, in some ways, I think that Armani's analysis is correct. And I think that I would do this if I was using considerable funds. I think it's very difficult to do that analysis if you're playing with $50 or $100. It's like a lot of work to go through to do that. And so it really comes down to, from a user experience point of view, would you rather use a vending machine that's really fast and gets you out something and maybe it's good, maybe it's not? Or would you rather have something that's a little more curated and, has a little more tailoring to it? So I think that's my answer. I mean,
I think those are all really, really good takes, right? Keen to hear from Chris, because you're building perpetual DEX, right? So I think whether it's from ethos or vision, you kind of made that choice, right? So how do you think about this? Why did you make the choice of building perpetual DEX? Yeah.
Yeah, I think that the good thing about a CEX is it's kind of a vertically integrated wall garden, kind of what Armani brought up with the control of funds. The CEX is going to handle the security for you. It's going to abstract a lot of that away, which can enable a good UX. It's going to run the whole matching engine. It might not be clear with market integrity whether they're counter trading you or what you're doing, but in theory, because it's centralized, can offer a very convenient UX and really good performance, things that historically DEXs have struggled with. So there's definitely a lot of benefits to the vertically integrated type approach. And you see DEXs, perhaps not actual DEXs, but under the veil of being a DEX, moving in that direction, because there is a lot of advantages to the scale and the UX that comes with being more vertically integrated. I think the benefit on the DEX side, though, and it ultimately comes from being more open and more bottom up and not controlling user funds, is it's more community based, it's easier for customization, it's more permissionless. For example, on Drift, there's different aggregators that build on top of it. You can spin up a client on top of it. It's much more like the bazaar of anyone can come in and build on top of it and use it how they would like. And I think that leads it to be more community based.
Yeah.
So historically, if a user uses Coinbase, it's very much like a business. They use it and they don't have any ownership or any attachment to it. Whereas with these very successful DEXs, people actually participate, own it, care a lot about it.
Mm,
And just as a developer and builder, I've always been attracted to that more bottom-up, open
mm,
type ethos.
yeah.
And that's why even though sometimes there's more difficulties building on-chain perp decks, I think it's ultimately worth it. And I think the arc of progress is like Solana keeps getting better. These high throughput blockchains keep getting more performant. And in the long run, those kind of like shortcuts you take to get more performance will get washed out. And so that's why I'm motivated to keep building a perp dex.
So I guess if I were to ask, do you think DEX is gonna win in the long run? Do you think both CEX and DEX will actually coexist? Because over the years, I think DEX is taking shares, right, from centralized exchange. But of course, centralized exchanges are onboarding more and more users into the space as well. Do you think there will be a coexist state? Do you think DEX is going to dominate in the future? What's your take?
I think they can cohabitate. Even
Mm.
something like a perp dex and that has builder codes like Drift just launched. You
Yeah.
can build a centralized exchange type interface that controls funds and just routes through a DEX liquidity.
Yeah.
So there's values to both. I think a lot of users want the convenience that comes with the CEX and the security benefits.
Yeah.
And then other users, more power users, potentially more sophisticated users like institutions, want to know how the whole system is working. They need it to be open source and transparent so they know they're not going to get rugged. And they might interact more directly with the underlying DEX without all that extra like hand-holding.
Yeah.
So I don't think it's necessarily one wins versus the other. I think they both have their place.
Yeah, agree. I think it's catering to different segment of customers, different needs, right? If I were to think about it, assets were created on chain, right? So if you want to gain access to some of the exotic assets that were new, it's perhaps best to go on chain. And then, but then for the general public who doesn't have so much knowledge or doesn't feel comfortable interacting with DEX, right? Then they go on centralized exchanges. But of course, there are certain risks they have to bear as well. Maybe I want to take the conversation back to Armani because you guys started off being a wallet, a very successful wallet in Solana. And then you build the X NFT standards and whatnot. And then now you're putting a lot of resources to build a centralized exchange and getting licenses across kind of a range of jurisdictions, right? And that's no mean feat because we all know once it gets to compliance and regulation licensing, a lot of resource has to be thrown under that. So just kind of understand what's driving that strategical decision making. Why don't you guys stay on chain?
Yeah, it's a great question. It begs the question, what does it mean to be on chain?
Yeah.
I think one of the reasons why I reject the whole CEX DEX dichotomy is because my assertion is that the first principle, the way to build not only a centralized exchange, but any traditional financial institution is in the same way you build a DEX. And there's one property that you throw away that does not apply to the centralized exchange context. And it's simply censorship resistance. But everything else, trust minimization, verifiability, auditability, being able to compose with it, being able to build clients on top of it, whether it's builder codes or anything else, you can do all of that with a centralized exchange. The one ingredient that's different, you have a distributed validator set, you can distribute control, you can have all of the same trust minimized properties in a centralized exchange, but you have one difference. You have a compliance team that imposes censorship because that's the only way for you to follow whatever rules and regulations and laws that exist in all the various countries around the world. And then the question is, okay, why do you do this? And what is like the relationship between the CEX and DEX when that happens? And the reason to do it, in my view, is simple. If you want to expand beyond crypto assets, right, you want to do something like, RWAs or equities is maybe the most salient example. Well, then you need to have this compliance function. You have to, this might not sound like sexy or cool or whatever, but it's just the truth. You have to KYC. You have to ensure there's no insider trading. You have to ensure there's no market manipulation. You need surveillance on the order book. And these are all the rules and requirements if you want to go from, 1 to 3 trillion of assets in crypto to, 100 trillion and beyond to give access to the larger kind of capital markets that exist in the world. And so this was really important for us to be able to build this function so that we could expand beyond crypto and to actually fulfill this dream that I think everybody like loves to work towards, which is the convergence of crypto and traditional finance, so that crypto eats all of TradFi. And so the reason why we did all this was so that we can get to that kind of stage where we can have crypto, we can have equities, we'd have spot margin, borrow, lend, perpetual futures, all cross collateralized, cross margin into a single account, built on a money market, getting yield on everything, right? To put in my Apple stock and withdraw dollars. And now you're starting to actually start talking about this dream that everybody's been talking about in crypto over the past 10 years of reinventing finance.
Yeah.
And a big important part of that is the compliance function for better or worse. And so I view them very harmonious. The wallet is just as important as the exchange for us. It's a single app. We want a single user experience. We want our users to be able to log in with their exchange account and be able to go, to the borrow, lend on Drift and get yield. But we also want regulated counterparties to do the same thing that digital asset treasuries did for crypto assets to now do it for market structure. You can think of regulated centralized exchanges as nothing more than a DAT for markets, for crypto markets, where you now have like a regulated interface, an API for people that can't go and trade in DeFi directly. And there's a lot of these people. I would say the majority of the capital in the world falls into this category, where they need that interface where they can actually plug in and actually get access to crypto assets and crypto parties, whether it's, fiat rails and every currency in every region around the world. If you want to talk to a bank, the first thing they're going to start asking you is, what does your compliance look like? You want to be able to deal with regulated counterparties, right? Pension funds, regulated hedge funds. They have LP agreements that have specific rules and requirements to be able to access assets, right? This is why DATs even exist in the first place. Otherwise, I would just go create an account on Coinbase and buy my Bitcoin. Like, why wouldn't they do that? And so filling this hole in the market and playing this role is ultimately why we went this route, because we think that there's not a lot of crypto native folks that want to bring the best that crypto has to offer and actually apply it to the context of traditional finance. And you need to do both. And so we hope to play that role and to help kind of the growing a DeFi ecosystem emerge, and to be able to route a lot of those resources and that capital inflows and to bring it actually on chain, whether it's in our own kind of exchange itself or into Solana, Ethereum, or beyond.
Got it. So if I understand correctly, what you guys are building is actually this hybrid model. So in a way, you have centralized exchange, very regulated, very compliant, and you talk about having strong compliance function to make sure it can't be evil, right? And don't be evil. And then such that you are able to onboard a lot more users that don't want to interact on chain. And that flows can come in, but you also have the DeFi access through the wallet, such that you kind of have the best of both worlds. That's kind of
the one thing I would add is to, don't be evil or can't be evil. It has to be built into the system from an engineering point of view. You have to be able to use it, you have to be able to trust it with code and math. And so not only do we have this, compliance function that all TradFi firms have, but we also built the entire exchange as a permissioned blockchain. It's a multi-node validator network. There's no single point of control.
For the centralized exchange. I didn't know that. Okay, that's interesting.
In as trust minimized the way as any of the modern DEXs. And it makes sense for our context, because if you want to be able to solve these problems, whether it's FTX, 2008 financial crisis, the 1930s, or anything in between, you have to do it at the engineering level and not just rely on humans to say, trust me, bro.
That's such an important clarification, because I was going to push back and say, can't be evil versus don't be evil. I would definitely go for can't be evil, right? And so the centralized exchange is actually built on distributed system, right? With improved transparencies and whatnot.
That's right. You can do it's a private permission set. We don't have public data. But you can do computational and state integrity proofs in real time. We do we attest to a ledger that you can prove. We publish it at the end of every day. And anybody in the world can verify that their balances and portfolios sitting there every single day. Not once a year, not once a quarter, not once a month. It's by far the most trust minimized, regulated financial institution in the world.
No, that's great. I hope all the centralized exchanges starts to adopt this. And Ogle, love to hear your take on this, because you're building American.fun, which is more like a launch pad, right? So it's very much on chain. But how do you think about this?
Well, America.fun starts as a launchpad. That's kind of stage one. It's so I'm an advisor for World Liberty Finance, as I think some people know, on the security side. So security I take very seriously, and the security of users I take very seriously. And I think that when you have something like Pump Fund or something completely permissionless, I like that from an ethos point of view. I came into crypto really early, so I like this kind of stuff in general. But I also think that it's ripe for exploitation, right? And so you have situations where 98% of people who launch something on these launchpads lose, right? And so the 2% or 1% who win are generally insiders, or they're the launchers themselves, right? And so I think it's not really like a sustainable model all the way through. I think there's a certain amount of gamblers who would like that, but a lot of people who wouldn't. So if you think back, if you're old enough, which most people here are not, but if you think back to America Online and the way that it had everything set up, it was one place where you could have your email, you could have your chats, you could have your web browsing, but you could also trust and put rules around that such that your kids can't go and like see things they shouldn't see. Now, if they are smart enough or clever enough or motivated enough to go somewhere else, they can go to Open Internet Explorer and see everything they want to see. But inside of the AOL platform, there are guardrails. And it's the same thing with America.fun. And that's why the ticker is AOL, sort of an homage. It's like a friendly homage to that. And the idea is it's a permissionless launch, and anyone can launch whatever they want to. But it does cost a little bit of money to do so. There's only one time you can have the same ticker. So there's not going to be 63 different broccoli tickers. It'll be one broccoli ticker, and we allocate that. And on the front side is permission. So the America.fun website itself is permissioned, and we decide what goes on there.
Yeah.
And the way we decide that is through a series of different conversations we have with the developers, the builders, etc. It's not as arduous and complicated as what Armani is doing, which is incredibly difficult, where they're talking to regulators. They're actually doing things what I would call like the right way. We're not quite doing things the right way, but we're doing things righter than the way that they're currently done in general. So yes, that's what America.fun is looking at from that point of view. I think that our goal is that the people out there who want to play games, who want to invest, who want to do degen things, who want to launch, and they're happy to take some risk, but they don't want to be able to. But they do want to be able to go to sleep at night and not worry about waking up the next day and everything is completely gone from a rug. That's where we're at.
Yeah. No, that's good take. Chris, I think I want to touch on one question, right? Because Hyperliquid launched this Hypercall, which is they kind of allow all the front end apps to be linked into their perpetual DEX engine. So it sounds like their strategy is I'm not gonna get licensed, right? But whoever is front facing the users, kind of like the CEX, right? You go and get the license, compliance, and channel. Do you think that's a feasible strategy? Is that something you guys are potentially thinking about, or?
I would say Drift already kind of serves as this core DeFi primitive for all of Solana.
Yeah.
So there's tons of apps built on top of Drift already. A lot of the yield aggregators plug into Drift because it's one of the largest borrow lends. Now with builder codes, people are starting to build new trading clients. There's also vaults built on top of Drift, which enable users to get yield from active managers. So Drift's vision has always been to be this core DeFi primitive for a much larger Solana DeFi ecosystem. So that's kind of our ecosystem side of the push. And then at the same time, as a platform, you need to bootstrap demand and get usage. So we also have a whole team focused on product to make like a great trading experience from just like the very vanilla, like using a UI to use Drift. So we kind of spend half our time trying to make great products, and then the other half of the time building this like core DeFi primitive for the bigger Solana ecosystem. And yeah, one of the main benefits of being Solana is it's the blockchain with the most users, and there's so much going on, so many assets.
Yeah.
A lot of our markets are Solana coins, so it's a very good position to be at the center of that larger ecosystem.
Got it. One last question. I see we only have 15 seconds for the panelists. What percentages of your net worth you feel comfortable putting on DEX and on centralized exchange? Or what percentages do you feel comfortable holding self-custodial?
I have 0% on centralized exchange.
Okay.
100% of it is either in my own custody or it's on a decentralized situation.
Okay. So still very much trust self-custodian.
I don't have a single dollar that's on a centralized situation. And it's not because I don't trust Armani because I completely trust this fellow here. Whenever he builds something that I can like verify in a lot of important ways, then I would put potentially money there. But I don't trust. I'm sorry to say, I don't trust Coinbase, and I don't trust Gemini, and I don't trust these people.
So it's a
to do it.
principle thing.
It's principle, and I think it's practicality. I lost a significant amount of money in FTX, and that was a risk I knew I was taking. I swallowed that risk, and I said it was worth the worth the reward I was getting.
Yeah.
I was wrong about that.
Yeah.
Right. And so I'm not going to make the same mistake twice. You step in and put it one time, not two, right?
Yeah, I feel you. I'm also FTX victim.
Yeah. Exactly.
But still, I have certain amount of net worth on centralized exchange just because there's, trading fees and all this earn product, right? There's product that's available that's kind of have great UI UX.
Yeah.
What about you, Aman?
I'm also a FTX victim. I lost $14.5 million on FTX, so I can relate to you.
Victim panel.
Look, I mean, I think it's a super nuanced question. You can't give like one answer for a size fit all. There's certainly people that are more afraid of themselves than they are afraid of the exchange. I would argue there's not a single margin system on the planet Earth, whether it's a centralized or decentralized exchange, that doesn't ultimately have a multi-sig. If you look at 99.99999% of all decentralized exchanges, other than maybe like Orca on Solana and Uniswap on Ethereum mainnet, they all are controlled by multi-sigs, which means they're all centralized exchanges at the end of the day. From a security point of view. You could have 3-4 people steal all the money like that. And so to answer your question, I don't think, it's there's not like a singular answer. And it's a super nuanced conversation.
Yeah, agree. Depends on the user's
yeah.
knowledge as well, right? How comfortable you are, how good you are, because some people might be like, I don't want to operate my own wallets. I might lose it, right? There's nobody I can call. Yeah, totally. Chris?
I think we're getting kicked off the stage, but I'm a developer, so I self-custody like 80% of my net worth probably.
Yeah, makes sense.
It's easier when you can code.
When you have the technical chops.
Yeah, I trust the CLI more than I trust most people, so.
Awesome. Thank you so much for your insightful sharing. Thank you so much. That's the end of the panel.